small farm, consumer lending, or in this case, small business. At the end of the day, while we passed a number of laws and regulations that ban the practice of discriminating against viable customers or conducting business in unfair, deceptive, or abusive manners, the most helpful lens from which to view the way much of the industry operates is the same way you would view telling your 5-year-old how to behave when they don't really want to. They're just not going to do it, and they're going to lie about why their behavior is appropriate. So Woodstock Institute's purpose is to really dig deeply into the business model of the financial industry and understand how financial products and services are provided to segments of the population that are typically ignored or preyed upon, and to find ways for that to suck less. So here we are again. This is our 4th try to get the non-bank lending industry to be transparent about the cost of credit to businesses in Illinois. We fought very long and hard to be able to pass legislation to make the cost of credit transparent and understandable. So back in the 60s, it's called the Truth in Lending. And it has allowed individuals to be able to understand and shop for the best credit for their needs. You want to go buy a car, you want to get it financed, you have a choice between one institution that's offering you a 5% loan and another institution that offers you a 3.75% loan. And you make the decision that is based on reality and math and a common benchmark. So it's disappointing to have to use a legislative process like we are right now to be able to enforce moral behavior. You would think that common decency would prevail. I imagine a situation where you're in a neighborhood cocktail party where somebody asks one of these lenders, so what did you do at work today? Well, I just tricked our local coffee shop into taking a 397% loan by advertising it as a 12% loan. Would that person slap them on the back and say, good for you, we really need to hang out more? Or would they have a drink dumped on their head, talk to their wife about maybe you should leave your husband and tell them to move out of your neighborhood? So yet somehow we can't even get a committee hearing in the House about something so obvious and so important, which means it can't get to the floor for a vote. 2 other states have passed similar legislation, New York and California. Not exactly small states with just a handful of small businesses. And there was no financial Armageddon. People figured it out and businesses have flourished. So, like I said, here we are again. Is Illinois ready to protect businesses from predators or not? Our partners are all in. We have a very strong coalition and it's broad-based, and we're hoping that somehow this time we'll be able to cross the finish line. With that, I'm going to ask one of our most stalwart champions in the consumer financial protection space to step forward and make a few comments. Leader Cam Buckner.
Thank you, Horatio. Good morning.
Good morning.
Thank you all for being here, and thank you for your commitment to this work. I want to talk today about something that sounds technical, but is actually very simple. Honesty in the small business lending market. Small businesses are the backbone of Illinois. They're the barbershops, the restaurants, the contractors, the child care centers, the trucking companies, and the corner stores that hold our neighborhoods and our state together. When those businesses need capital, they deserve clear information about what they're signing up for. The same way that families do when they take out a mortgage or use a credit card. That's what House Amendment 1 to HB744 is all about. And I couldn't be prouder than to stand with my friend and colleague, Chairwoman Rita Mayfield, who is spearheading this in the House, the Woodstock Institute, the Attorney General, the State Treasurer, and a growing coalition of organizations who understand how important this is for Illinoisans. Right now, many non-bank lenders offer financing to small businesses without clearly disclosing the true annual percentage rate, the real cost of the loan. Instead, borrowers are shown confusing metrics, vague factor rates, or percentages that sound reasonable but don't reflect the actual price of borrowing. And when you do the math, when you convert those products into APR, the numbers can be staggering, and they often are. We've seen cases where a loan marketed as having a 15% cost actually carried an APR north of 300%. That's not a rounding error. That's not fine print. That is a fundamentally distorted market. Markets only work when buyers can compare options. You can't make an apples to apples decision if one lender is required to disclose APR and another is allowed to hide it behind jargon. And the harm that is done here is not rhetorical, it's real. In 2023, a growing number of business bankruptcies were directly tied to merchant cash advances and similar products. These are often short-term, high-cost loans that drain cash flow and trap businesses in redundant cycles of refinancing. And who gets hit the hardest? Small businesses in Black, brown, and lower income neighborhoods. Not because of poor decision-making, but because of unequal access to traditional bank credit. Federal Reserve data shows that minority-owned businesses are significantly more likely to turn to online and non-bank lenders because the front doors at banks are still too often closed to them. Transparency is not punishment. Transparency is protection. And it's also pro-business. When lenders compete on honest pricing, the best products will always win. When borrowers understand the true cost of capital, they can choose the product that actually fits their needs. Short-term, long-term, high risk, low risk, with their eyes wide open. Some opponents have argued that APR is too confusing or inappropriate for certain products. We reject that logic. If a financial product is so complex that it can be explained in a standard, widely understood metric, that's not an argument against disclosure, it's the strongest argument for it. This is about dignity, it's about fairness, and this is about making sure small business owners are treated like adults, not like marks. Illinois has always been a place where hard work, innovation, and entrepreneurship matter. Entrepreneurship should not mean signing contracts you don't fully understand or being punished for trusting the wrong lender. This bill puts transparency back where it belongs, at the center of the marketplace. And I'm proud to stand here today and say Illinois small businesses deserve nothing less. It is now my pleasure to bring up to the podium Mr. Jay Goetz.
Morning. I'm not with an organization, I'm just an entrepreneur. I've never had a job. I graduated with an accounting degree in 1978 and went right into business. I opened up a picture frame shop because I thought I could do better than what was out there, and I had done it in high school and college. The business grew very quickly over the years. It became the largest in the country within like 5 years. Since then, this is now 46 years, I've opened a furniture store and a wholesale business, and I have 114 employees. And I just want to give you a picture of what it's like to be an entrepreneur, just minding their own business. Here is the mail I've gotten over the last few months for all kinds of financing. Here's a check for $362,000. Here's a check for $400,000, $300,000, and it's absurd. One of my favorite one is 3 of them came to my employees. $750,000 they're ready to lend with my employee's name or current occupant. This is what's going on out there. So my argument is a lot of the people getting these loans are not looking for loans. They just kept getting mailings like this and thought, oh, I could use that money for something, and they don't understand what the cost is. I called a couple of these places, and it's rather shocking as to what the expense of them are. One of them I went to, I Googled their name, and I pulled up some comments from some people. This is just yesterday. This guy borrowed $12,500 for 90 days, and the payback was $199 a day, which might not sound too terrible until you do the math. 344% interest. In the comments, when you look at the thing, they're all, oh, they were so nice and they communicated well. Not one person talked about the interest rate. So, A, people are getting inundated with these. B, it's extremely I have an accounting degree, so I know how to figure out the interest rate. Most people don't. It's extremely difficult, if not impossible, to figure out what the interest rate is. And while they think they're kind of dealing with a bank, they're really flirting with bankruptcy because they get into these loans and can't get out. And many of them, it's not just about comparing loans, it's about you shouldn't be borrowing money. And if they didn't get tantalized by, oh, look, you can get $100,000, they would have never gone out looking for a loan in the first place. I'm sure many of these people did not just go online looking for loans. They got sucked into one of these deals. And the reason the interest is so high, part of it is because the default rate's so terrible and the bankruptcy rates are so high. So I'm always told, oh, small business is so important. We've got to support small business. They generate half the jobs in America. And I'm here to say, how is it that small business has been excluded from the same protections or the same guardrails as the regular population? How is it that this institution of small businesses that is so important to America is left out in the cold to get taken advantage of by people that are targeting them because they know they could use the money for something? So it's a real problem. Before I got approached from one of these groups, I didn't understand how bad it was, and since looking into it, it's horrifying, and you don't read about it. They just go out of business, and people lose jobs, landlords lose tenants, neighborhoods lose important small businesses, and it needs to be fixed. And there's no reason why we shouldn't be able to count on our government to give small business the exact same protections that everyone else gets. Thank you.
I love it when people bring props. That exemption is something that is confounding in terms of the inequity of consumer protection with regard to the Truth in Lending Act. That loophole is something that we find is causing damage not only to existing businesses, but to people who want to start business and are looking for capital to be able to get things started. And one of the organizations that deals with this every day is an institution called the Community Development Financial Institution. They are formed to be able to provide capital to individuals and businesses that typically find a harder time to get that capital and that coaching from the traditional financial industry. And one of the most successful community development financial institutions in the small business space, not only in the Chicago area, but in Illinois and also nationally, is Allies for Community Business. And next speaking is Brad McConnell, the President and Chief Executive Officer of that organization. Brad?
Thank you, Horacio. I'll be brief. Allies for Community Business is a nonprofit community development financial institution, as Horacio said, and our mission is to provide the capital, the coaching, and the connections that entrepreneurs need to grow great businesses, take great jobs and wealth in our communities. We serve all of Illinois, and our objective here is to provide the right loan to businesses who are seeking to grow their businesses and need the capital to fund that work. And we need to do so in a way that is priced smartly. So we provide an annual percentage rate to everybody that we are offering a loan to, and we do so at the time that the entrepreneur is coming to us asking for capital. We listen carefully what they're trying to achieve. We offer them a term loan or a line of credit or revenue-based financing. We tell them exactly what the annual percentage rate is at the time that they're evaluating that loan, and they can look around. If they find a better offer, they should take it. And if they find that our offer, with the annual percentage rate that we offer to them, is the right thing for them, then they'll use it. I'll add that I have heard from other lenders who we compete with that maybe there are times, the argument goes, that, well, if I'm offering a shorter term loan than say a year, then an annual percentage rate, maybe that's not the right way to describe what it is we're doing. And I find that to be analogous to say, well, I'm only gonna drive 10 minutes down to the grocery store, so I shouldn't need to see what my miles per hour is when I'm driving down the road. I should have like a minutes or something metric for how fast I'm going. That makes no sense. All of us need, whether we're a small business owner evaluating credit, whether we're a driver trying to make sure that we're following the law safely, we need to have a standardized, easy to understand metric to allow us to make sure that we're doing the things that we know we need to do. We're making good decisions based on the information that's available to us. Annual percentage rate is the means by which lenders who are trying to do the right thing to their consumers, to their borrowers, particularly their small businesses, annual percentage rate is the means by which we can communicate clearly what the cost of this capital is going to be. So, On behalf of many, many, many nonprofit, community-focused small business owners, Allies for Community Business is fully in support of requiring everybody who is lending at whatever price you want to state what the annual percentage rate is in the offer time when you're making a small business, you're giving a small business an opportunity to be able to borrow from you, because that way small businesses will make good decisions for themselves, for their employees, and for their families.
Thank you very much, Brad. That's such an important point. Many of the arguments against this type of activity or this kind of disclosure is that the APR is either not fully transparent and not indicative of the value of the loan or the cost of the loan, or it's impossible to calculate. And given the fact that this has been tried, this has been implemented, and this has been successful in other states, as well as many lenders providing that information to their borrowers, means that those arguments are made by individuals who either don't know math or are profiting from the deception of the pricing that they're offering. With that said, being an advocate in terms of the protection of small businesses, as well as the infrastructure for the way that capital is deployed and accessible to small businesses, is the main focus of the career of the next individual who's speaking, Jerry Aglaplay. She not only is currently in a role with regard to small business majority, but she was also a Biden appointee for the Small Business Association. Thank you very much, Jerry, for coming.
Okay, good morning, everybody. Small Business Majority is a national organization celebrating its 20th year of being an advocacy, policy, and education organization, as well as leading in the ecosystem of being that hub for organizations and small businesses alike. We're not a membership organization, simply anybody who believes in our mission of advancing policies that level the playing field so that businesses have equitable opportunities to grow, start up, and build wealth is incredibly important for a small business majority. And I want to say about building wealth. We always talk about that owning a small business is the next best way to building wealth, next to owning a home. It's getting harder and harder to do that, especially in the current environment. Affordability of finding that capital and also owning a business has become challenging in these times. What we've seen from a federal level is the dismantling of the CPFB, which is the federal agency our tax dollars paid for, that not only prosecute these bad actors charging 100, 200, 4,000% APR because they are not required to disclose it, but we've also, that agency is responsible for also recouping the funds of those small businesses as well. When I talk about building wealth in this country, these lenders are disproportionately targeting women, communities of color, those in rural areas and disadvantaged neighborhoods, knowing that their knowledge capital to accessing financial capital is limited. So they're easy prey to these lenders, especially the non-bank lenders that are operating outside of the state of Illinois. Yes, I said owning a small business is the next best way to building wealth in this country. Let me tell you how incredibly important that is when we consider that the median income of a small business owner with no employees in the Midwest, including Illinois, is roughly $46,000. That's $46,000. That's why it's not surprised with many of my colleagues here that we see many small business owners start up as they are still working their jobs, or second job at that. We need to make it easier to level the field through our policies for small businesses to start up and grow, considering how federal policies, high inflation rates and tariffs are making it more difficult to be an affordably run small business. So a Small Business Majority is asking to please pass this law and joining APR for All Coalition. And one last thing, let me tell you a story. I spoke with a small business owner whom we had worked with about 5 years ago on a research project investing on free services that we all provide in the community for small business to grow. It was on Martin Luther King Day because that was the best day that he could speak. But it was a black-owned business, and he himself has said he would not have been able to have the successful business he has now, 6-7 years later, when all of partnerships in the ecosystem provided him with free services, had it not been for our organizations and also having APR for all in terms of transparency for himself to find that capital as well. So we do have stories also of small business owners who are clamoring for this law to pass. They get APR rate when they have their student loans, They receive the APR when they have their car loans and their credit cards. It's only fair as small business owners that they also have the APR disclosed as they shop for small business capital. Thank you very much.
Thank you, Jerry. In closing, the coalition that we all are a part of in pushing this forward is not a combination of names that you would normally see together. There are small business advocacy organizations like Small Business Majority, Small Business Advocacy Council, CDFIs like Allies for Community Business. We work together often. But this is an issue that's broader than just the consumer protection space. When you have associations like the American FinTech Council, which is a national association of non-bank lenders, who see this as an issue that tarnishes their members' reputation by other non-banks doing things that are predatory and deceptive and abusive and harmful economically to such an important portion of our economy. These are not necessarily normal alignments. We may view things similarly, but we don't always go shoulder to shoulder. Another partner that we are very proud to be working with is the State Treasurer's Office. Sarah Meek is here representing her agency, and they play such an important role in the state of Illinois, but they're also working closely with other state treasurer's office in understanding the importance of this issue, including in California and New York, who have passed this. So there's a lot of momentum, a lot of energy, and a lot of power behind protecting small businesses in a moment in time where we're having conversations about economic sustainability and affordability. The last thing we need is weakening such an important foundation of our economy. With that said, I want to thank Leader Buckner, entrepreneur and business owner Jay Galtz, Brad McConnell from Allies for Community Business, Jerry Aglepe from Small Business Majority, Sarah Meeks, Miano Miller from Woodstock Institute that does so much of our heavy lifting. I'll take questions at this point if there are any.
This year, affordability is a major item that both the House Speaker, Governor want to address. Clearly, this could mean so much to small businesses. Can you stress why this should be a top priority for both the House and Senate this year when everybody is talking about affordability?
Anybody want?
Yeah, I'll just jump in real quick here. I think it's, to your point, we've been very clear about what our priority is going to be this year, right? Making sure that folks have some relief, not just in a theoretical sense, but they feel it in their pocketbooks and they feel it in their bank accounts. And for those folks who are, the small business owners throughout the state of Illinois, this has become a hidden price that has made it harder for them to do business, which has made affordability less easy to attain, right? And so when we look at the overall economic picture in Illinois, the overall economic outlook, we've got to make sure that we're not just lowering prices at the pump and at the grocery line and all of those things, but that the folks who are actually keeping our economy together are not being blindsided by things they did not sign up for. So this is huge. This fits into the broader scope of what we're going to do this year, which is why this is super important that we're able to move this within the session.
Can I give another answer to that? I can tell you that the government's done a really good job of shutting down some of these predatory lending. As a result, the people with money are looking for other new victims. I'm getting way more email. I get literally every single day 2 emails, 3 emails a day about borrow money, or I get it in the mail. It never used to be like this. It's getting to be the only safe harbor for these people is small business. So it's getting worse and worse. There's 5 times more solicitation out there today than there was 5 years ago. So I can't imagine how many entrepreneurs are getting pulled into these things, and the end result is going to be disaster for everybody. Thank you.
I'm glad you asked the question about affordability. The Small Business Majority was founded also first on the issue advocating for affordable health care. In these times, given what's happening at the federal level regarding the extended premium tax credits as well as Medicaid too, we see millions of small business owners in the state of Illinois who are self-employed who are going to be impacted by the rising costs of health care. And so what we're seeing also is a competition among the small businesses to even retain employees. We know people who are in business for themselves who have actually gone back to work for a big firm because they could not afford healthcare. So it's a comprehensive approach of the policies in the Illinois legislature to behoove them to pass this law in addition to the other laws to protect affordability.
And Representative, I'm also curious, it was noted that this is the fourth attempt to have reform. As someone who's been in the House, why hasn't your caucus moved this type of plan previously?
Yeah, so much to the chagrin of all of us who care about this stuff, sometimes good things take a little while. However, we know that the time is now. We know that we can't wait anymore. There has been 4 years worth of negotiation and conversation, and the truth of the matter is that while we've had those conversations, which are a very important part of the process, people continue every day to be victimized by the system. And so at some point, you've got to be inclined to action and to move forward. I think we've talked enough. I think we've had enough negotiation, enough conversation, and it's time to move forward.
Quite a few big names, including yours, as co-sponsors, some just joining on this past week. I'm curious, do you think you'll get some of the moderate Republican support on this as well?
I don't know why we wouldn't, right? The truth of the matter is that this is hitting folks in every one of the 102 counties, folks downstate, folks up by me. And the truth is, if you listen to their constituents, folks want to see not just, once again, theoretical relief, but they want to know that their state government is fighting for them. No matter where you fall on the conversation about what's happening in the nation's capital, people expect for state government to be a stabilizing force. And so we have an obligation not to shrink in this moment, but to come together, Democrats, Republicans, folks from whatever spectrum of their ideology that they may be in, to get this done. This is real legislation for real people. It's going to make a real difference.
Thank you, Leader. And we as a coalition echo that sentiment that this isn't a red thing or a blue thing. This is about protecting small businesses. We're not talking about Green Bay versus Bears. This is everybody needs to come together to be able to support small businesses so we have a thriving economy, because they are the engine primarily of new jobs. So whatever we can do together, I hope it happens and it doesn't become an issue that if Democrats introduce it, Republicans are going to be against it. I'm originally from Argentina. We have that there. We don't get anything done. We need to be able to overcome these barriers politically, irrespective of what's happening at the national picture. At the end of the day, we are responsible. We have a tremendous amount of responsibility to do what's right on Main Street. And this is something that's just, it should be low-hanging fruit. We're hoping this time that we'll be able to cross the finish line. Any other questions?
Thank you.
No? Okay, thank you very much, everybody.